right, everyone, welcome back to Money Show's Virtual Expo. We are so pleased to have you here. It's my pleasure to introduce Ryan Wilday. He has over 2 decades of experience trading equities, futures, and options. He began trading cryptocurrencies in 2013, and today melds his deep knowledge of the cryptocurrency market with Elliott wave theory. In August 2017, Ryan launched his cryptocurrency trading service on ElliottWaveTrader.net, and he is the analyst cryptocurrency trading service at ElliottWaveTrader.net. Ryan, thank you so much for being here. It's all yours.
Hey, thanks everyone, and thank you for attending, and thank you if you come back, if you've heard one of my presentations in the past and you've returned, appreciate it. So today I'm going to talk about Bitcoin miners, and you know, I think there's probably a larger theme behind this presentation, and that's how to benefit from cryptocurrencies inside a standard brokerage account. Sometimes I cover it. I mean, I've had a lot of years covering cryptocurrencies as an asset class, but you know, I think over time we'll see a lot more cryptocurrency exposure opportunities within brokerage accounts, and everything here even can pertain to a retirement account inside a standard IRA or 401k if you've got stock access. So I hope you'll find it useful in that regard. If you are interested in my service, which just very briefly is covering cryptocurrency as well as the topic at hand, which crypto equities, I cover stocks like Coinbase and whatnot, anything crypto exposure related, you can take the QR code on the left. We don't take credit cards. If you want a free trial for a couple weeks, you may get on our marketing, you will get on our marketing email, but that's about it. No phone calls or anything bothersome. And then on the right side, if you want a copy of this presentation, you can check the QR code on the right, or you can email a friendly gentleman named Thomas at info@elliottwavetrader.net. I'm going to switch the slides, but I will come back to this during the Q&A, or don't let me forget, so you can remind the host if I don't. But if you are slow in pulling out your phone, I will be back here during the Q&A. I'm not going to, great introduction for myself, so I won't belabor that. You can also review some of my history of calls here. Again, I'm not going to run through them, but if you're curious, check them out. And then, you know, I won't go over disclaimers in detail, but, you know, all of these things are not really recommendations. I always try to present kind of the pros and cons and the risks so that you guys are properly educated and can walk away with your own due diligence and research. But, you know, so you really are responsible on your own for deciding whether these products or asset class is good for you. But you can read those if you like. Here's the bottom line. If you want long-term Bitcoin exposure in your portfolio and don't plan to trade in and out, I'm going to say right off the bat, Bitcoin miners are really not the way to do it, especially in a retirement account, unless you are more of a swing trader. And so you'll see my technical analysis. I'll talk about the business difficulties that Bitcoin miners have. It won't be an exasperated or a very complete fundamental view, but I'll talk about the challenges at a brief level. Certainly a place to launch some research if you're curious. But more at a bottom line, I would say if you really want to get Bitcoin exposure in your portfolio, I would consider the BITO pre-share, or BITO for some, Pro Shares Bitcoin Strategy ETF. It is a futures ETF, so I'll talk about that very briefly on the end. I think that comes with risks as well. But it's certainly, of all the things that you could think of to put in your brokerage account, it's going to have the one that has a 99.9% correlation to Bitcoin. So it is very close to true Bitcoin exposure. You have to understand that futures ETFs have like other commodity futures ETFs, does have some issues, and I'll try to cover that. I don't have a slide on that, but I'll try to cover it at the end. More or less, the miners are really great in bull markets, but history shows that bear markets erase most of the gains. In the previous run. We've seen that. I've been through many cycles of Bitcoin's bulls and bears since. I've been trading it, you know, like Mark said, since 2013. So I've seen many of these runs. I've been in this professionally since 2017, and have you know, shepherded many subscribers through the ups and the downs during that time. And so I have a decent amount of history to say that there isn't any, unless I'll talk a little bit, unless miners do business in a very different way, they're really not the best long-term exposure. Again, They're great as swing trades. They're great for short-term runs. In fact, like one of the trades we're in right now is marathon mining. Expect to double out of it within the course of a couple months. But pretty soon we're going to be getting risk off in regards to that trade. Some people may hold a core to see if it does more, but we're already nearing a cautious zone. A lot of my work is based on the Elliott wave theory, not all of it, but most of my quick technical work and the hundreds of charts that I cover is usually using the Elliott wave trader. It allows me to cover an immense amount of charts, along with my colleague Jason, who is a co-lead of the service. This is a great analysis technique for just getting quick take, running a couple of measurements, calculations, and getting a quick take on a chart that is it's fairly quantitative, highly objective as an analysis technique. So you just know where I'm coming from, but the basics of it is that trends run in 5 waves, correct in 3, but more importantly, that each of the waves tend to have a mathematical relationship from one to another. So this is not a teaching of the analysis presentation, because it's quite deep, but we definitely help people learn it on the site. In short, what's really interesting about Bitcoin right now, I think if you've seen my past presentations, I was looking quite lower for Bitcoin, because hopefully you can see my cursor, but this $500 breach of key support at 16K, I plainly said in the last money show, because I could view that as a bad breach, although I said to confirm it really needs to turn around and breach that again to confirm a lower low around 13.5. But instead, right now, what we've got is a strong breach of resistance above. So again, when we have this situation, I'm going to look up until we breach something below it, and I've got a pretty good support at 21K, and I have another important support at 17K. And so as long as those supports hold, the idea of Bitcoin breaking below 16K is highly unlikely. And then I think you also know that if you've watched my presentations in the past, and it's written in my calls I've made, I've been long looking for 100K Bitcoin. In fact, 125K is the ideal target. Nothing's changed about that target, provided that we didn't breach this low, and so far it's hold. So is that where we're going right now? At least I think there's a really strong chance. There's a lot of levels between here and there. I do have an alternate count that is a little bit past this presentation's bandwidth, but this is really, really good news for Bitcoin holders right now. And at least now we can run our long trades with a stop. Stops are, right now, again, 21K and 17K are great places to be careful and consider, so if they stay below those levels, put a stop loss. But right now, micro action, the action we've had over the last 2 intradays, really show no inclination of turning around right now. It's quite strong. It's consolidating up on a high level right now, which technically says that there's more to go. So looking up till it breaks, and we'll ride up various support levels, tightening it up as we sort of shepherd it on to 120K if it's willing to do that. I mean, I'm actually quite surprised by this break, and it's got me, reevaluating my exposure, which I keep a certain amount of crypto exposure on at all times. And I've taken a lot off over the last few days just because we were coming into a key point here. But now I've got to decide where I want to take some re-entries and whatnot, as I took some profit off of the low. So this is really, really good news, and we'll see how it goes. But of course, naturally, if you've been interested in Bitcoin exposure, let me back up. And as it's very typical during market tops when Bitcoin was at 65K in 2021, where everyone wanted to talk about Bitcoin. Well, nowadays, no one wants to talk about Bitcoin, right? And it's a very natural retailer behavior to be interested in something when it's hitting all-time highs, and have very low interest when something drops by 50% or more. And honestly, this drop of Bitcoin from 65K down to a low of 15.5 is very tame compared to past markets. It's a very orderly bear market. And if you even look at this from, in a log scale, which is what this chart is, it's actually very sideways. I know it's crazy to think something is sideways when it's dropped over 50%, but I'm telling you, this is if you look back at historical corrections of Bitcoin, it was very, very tame. And in fact, I have it as a 4th wave of a 5-wave structure that started in 2018. So it's not even a very high degree correction. It hasn't erased that 5-wave structure off the 18 low, which was at $3,000, which was a low at $3,000. So this is the time to get some interest in Bitcoin. I'm not saying that the bull market is definite, but we have the first signs of the birth of a bull market, and one that surprised me. Even I didn't expect to see it here in the last week, have this first sign, the new bull market. And again, I'm going to emphasize that new bull markets are fragile. We'll watch it at every step. For signs of breaking, but so that brings us to miners. And here's the big problem with miners. And one of the expectations I hear from subscribers all the time, especially new ones, is that miners are like, it's like buying a gold mining share, right? Question mark to myself. It's like, right, buying a gold, or they make a statement. It's like buying a gold mining share. When Bitcoin goes up, the price of the product they sell, meaning Bitcoin, or in the case of gold, it just grows and grows in value. And so that company becomes more and more profitable. What they don't understand, which I'll show you in the next chart, is that what's called network difficulty hinders the rates of mining of Bitcoin, which is basically the crunching of transactions into a blockchain, which you can read up in. That's what mining is, and it's the process by which new Bitcoins are created. The Bitcoin network has a mechanism by which mining becomes more difficult as more people start doing the mining. Okay, so now what happens with public Bitcoin miners, they tend to finance to run after running after that higher difficulty. So as price goes up, difficulty goes up, and then they end up financing the debt to buy new machines that are more powerful, to mine more Bitcoin, et cetera, et cetera. It's like an arms race. Okay. Now, what happened, I'll show you some charts later, but what happened with Bitcoin is they ended up doing a lot of financing at the market top. Very retailer type behavior for a professional business. And when Bitcoin came down in price, they had to pay their debts. And so this is all the Bitcoin selling that they had to do as the bottom started to form. So as we've gotten closer and closer to a bottom in Bitcoin, they were selling, selling, and selling. Basically, just think about this. These businesses were selling the bottom, okay? Or sure looks like it. All right. And we don't know for sure, but we have the first signs that they sold the bottom. And that has classically been the case in past cycles. So basically, as miners are selling the bottom, you lose a lot of that optionality of the Bitcoin price that you see in a gold mining share. Okay. So my main point here in all of this, and if this is more complicated, please line up your questions for Q&A. It's too complicated, line up your questions in Q&A. But my point is, you cannot make the comparison. You can't make the comparison of Bitcoin miners to gold miners, because gold miners have a static production cost, at least during the duration of a gold cycle. They have a pretty stable cost. We've seen some energy price uptick, but that's only one part of their cost. Bitcoin miners deal with energy. But they more importantly deal with this hash rate or network difficulty that rises. Now it gets worse. It gets worse in this graph. I call this the Bitcoin miner murder weapon, because this is the killer of these businesses. The black line is the Bitcoin price, and the blue line is this thing I've been talking about, network difficulty, which is as the network difficulty, this blue line goes up, it costs more to mine a Bitcoin, right? Generally, it comes down in a correction. You can see a little bit in a correction in price. Generally, people stop mining as much because it's too expensive. But strangely, we've seen this sort of double whammy where the Bitcoin price dropped, but the difficulty kept marching on, and we're near new all-time highs. This is a chart I took yesterday, so you can see the March 2023. Difficulties at near all-time highs while the Bitcoin price is way down here. That is a recipe for Bitcoin miner murder. So, they're very difficult businesses on a fundamental basis, very hard to run. Like I've dreamed of finding the Bitcoin miner that learned how to hedge its production, learned how to time the market a little bit so they would not finance their machines at the top. That would be the Bitcoin miner I would invest long term. I don't know of one yet. because that would be, you know, the successful business. Of course, they'd have to show a track record over time, or maybe they have to hire me as a consultant to help them with market timing. I don't know. But that or needs to be a miner that gets a little bit smarter about that business, and we haven't seen one yet. This is an example. I'm going to go through the 3 charts I'm going to cover from a technical standpoint. But here we're going to talk about fundamentals real quick. But I don't know what happened to the shade here, but you can see how their debt, this is their long-term debt. This is just available through TradingView. I double checked it on Seeking Alpha's financials. So it's not like this is a rigorous fundamental view, but at least did a couple double checks. But you can see how as the market topped, their finance, or their long-term debt went sky high. Okay, right at the market top. Right. And so now they're dealing with it here, and what happened as Bitcoin price was dropping. Marathon, this is Marathon Mining. They were selling Bitcoin. Same story in Hive. Okay, Hive is classically an Ether miner, but they have a substantial exposure to Bitcoin mining. And since Ether has moved to proof of stake, can't mine it anymore. I think big substantial. They're probably staking some Ether, but they've got to spend their mining machines. Well, Ether mining machines can't be moved to Bitcoin, so they had to, I guess, sell them. I haven't looked what they did, but they probably sold them and bought Bitcoin mining or something like that, or paid off their debt. I don't know. But you can see that their debt again went sky high near the market top. Really, really, really bad behavior. I'm sorry. Kind of scary business process, to be honest. And then Riot, similar. Riot seems to be late bloomer on mining. I actually like to see this picture a little bit better. At least they started financing near the market bottom. So this is not nearly as bad. And I have to say that from a lot of fundamental measures, Riot looks better than it has in the past. But Riot is a bad name to me because we traded this in the service 2017, and in the 2018 bear market, this one went to new all-time lows. Right, so this low down here, actually I think it was, I have to look, it may have been previous, but anyway, the lows in the previous bear market were new all-time lows. And when, you know, I'm surprised that Riot didn't pull that off this time, to be honest, from the past. And some of that has to do with the sort of late financing, which at least they were able to buy some new machines while Bitcoin is a little bit cheaper. That was nice, but they're still dealing with difficulty that is new all-time highs. So this is hopefully a quick picture of the difficulty of Bitcoin mining. And, you know, I would say, you know, like if you want to get into Bitcoin mining yourself as an income strategy, it's a lot better than, I mean, it's a lot better if you do it near market bottoms. It's sort of the same process you've got to follow. So you'd want to buy your machines now, you'd want to mine them. And then at some point in time, they become too expensive to run, turn them off near the market top. If your energy costs are more than your mining benefits, and then sell your Bitcoin or hedge it or cut it down, whatever. Okay, so let's talk the technical side. As I said earlier, you know, the long-term charts on Marathon is the less destroyed. Okay, but the long-term charts on most of these miners have been kind of wrecked in this bear market, while the Bitcoin price structure chart looks great. It actually looks really great. If you zoom out on a log chart, you see a strong uptrend over on a monthly chart. Just go look at that and compare that to these charts, and you'll see quite the technical destruction, meaning that this bear market has caused them to retrace most of their 2021 rallies. And all of them are threatening new all-time lows, but Marathon is probably the least likely to do it. We've been taking a swing trade here. You can see one of my blue boxes, which are support levels. Yellows are targets. So we're swing trading, at least my guidance is a swing trader for 20. I know some subscribers are not so offended by miners as I am. Not, you know, I have one subscriber who posts all of his fundamental analysis on miners. Does a great job. Appreciate him being the service. He's kind of a counter to my view, which is encouraged. But I take the technical view, and I'm only willing to swing trade this to the 20. I might hold some shares after that, you know, if the profit is as solid as it should be. I was buying and buying into this blue box because that's just my standard way of trading. And then I'll let it off in the 20 region. Then we'll see if it can break over 26 resistance. If that's possible, we could get what's called a high B wave, which could become very close to the new all-time highs. But there isn't what there isn't in this chart is you know, the sort of outrageous view of this chart from a long-term basis has a $6,000 target. And I'm not saying it's going to happen by 2024. I kind of tend to ignore the y-axis on my charts. but I don't see the Bitcoin chart going to 125K, which is only 5x, changing charging Bitcoin miner from $7 to 6,000. It's possible that it goes into a high B wave, which could reach anywhere from $40 to $100, and then comes down in a C, what's called C wave. That would be this red B, but it can go higher. The first step would be over 26, and then comes down to C wave, and then in the next cycle, it's possible they could go to 6,000. But I would assume to get there that they would fix their business process and their operations, right? I hope that they would have learned something from 2021. And so if that's the case, then maybe that's what's going to drive it to 6,000. But right now, I don't believe it, right? And I'm just giving you a very blank Elliott wave projection, and then talking a bit more about, okay, what's the near term? What can we accomplish from a trade perspective? And about the only thing I'm willing to get out of this chart right now, till I see more, is $20. All right. And then as people know, I'm very willing to change my view, but it's gonna have to prove it. Riots, again, I didn't take this trade. I've kind of had it with miners, but we put this blue box here in this area, this region. I can't see the support level, but was about $3. Doesn't look like I touched it. Again, it has surprised me with strength, but it's already hit this red box, so is already this could be red or yellow in the situation that red is usually resistance, yellow is profit taking, but regardless, I suggest that people take some off in this box, and it's already tapped it today. I can't remember what I was saying today, but I think this one has a little bit more to run. It's got a few more waves to make, but should get up to the 15 region. But this one now is high risk unless it can shove itself through 15, and then has potential of filling in this red chart. That would be long-term bullish. At least, so when you fill in 5 waves here, then we would look for another wave 2, much like this B/red wave 2 down here. It would be somewhere down in the 7 region, just guessing, and then we would look at a larger swing trade. So if it starts to push through the 15 region, I'm kind of interested. So we'll see. And then lastly, Hive. This is the one to avoid for sure versus long term. It's actually got 5 down, which is bearish. 5 down is with 5 waves is the direction of the prevailing trend in Elliott wave speak. And this one has initiated a new downtrend, provided it stays below 1228. So I've got 14 resistance that would be pushing. Yeah, 14 is would be the indication that it's breaking, but the I'm looking at this backwards. Yeah, sorry, 14 is very clear resistance for more than what I'm saying, meaning something bullish, and it would have to do it in 5 waves. That would probably actually take it to 24. But barring that, I actually see this one dropping into the 22 cents region. I mean, this is kind of a bankruptcy setup, to be honest. That's what I call these setups. So the question is whether it can take that out by rallying through 13. Scenario here is, this one could stretch itself into the 14 region while Bitcoin is crossing into the 100K region. And then again, if this business continues to be as poorly managed as it has been, taking on debt at tops, maybe they would do that to potentially save the company. And I'm just talking sort of what starts to happen as on the fundamental side as Elliott waves start to work out. These are all educated guesses based on what I've seen from this company in the past versus the Elliott wave counts. It's possible that they try to finance right at the top again, and they just go underwater after that. Again, purely theory, but again, there's nothing bullish on this chart long term until it breaks over 14. All right, so that's the gist. So what do I suggest to you guys doing with your brokerage accounts? And again, as I said earlier, I suggest BITO, the Bitcoin shares. If you are familiar with my talks in the past, we used to trade GBTC a lot. I still hold some. There is certainly the chance that GBTC wins their current SEC. In fact, our first hearing was really positive. And then it becomes an ETF, and then it goes back to par, and everyone gets an instant double. Actually, I think it's more like it's not a double, but like a 70% return from here based on the discount. Again, if you don't know what I'm talking about, asking Q&A. But my suggestion for a lot of people is, hey, that's a big bet, because the SEC has been not friendly to crypto. That's a big bet. Now the court can force them to be, but there are a lot of legal reasons why the court may not do that. So if you want a more quote unquote safe exposure to Bitcoin in your brokerage accounts or IRAs, I would use VITO. And then the target I've got here on this one is 80. In the past, I had suggested that this one, based on being futures, would show what's called a roll decay. But what we've seen over time is Bitcoin futures, though still in contango, that's where the next contract is higher priced than the front contract. That contract difference has gotten tighter and tighter versus like oil and gold, which tends to be a little looser. And it's really only produced about 2% of decay per year. And what's really interesting is to collateralize their futures so that this is not a leveraged fund. It holds treasuries. And since interest rates are up this year, this fund has produced, I've seen many yield rates, and it kind of depends on what month you look at, but it looks like it's around 6% per year right now, yield, again, based on the treasuries that it has in the account. At least I've been holding it, and I've been getting, I think the last month I got 15 cents per share. And I believe that's supposed to be monthly, but we'll see. So there's your income strategy if per the theme of this conference. So it's pretty interesting. And then if you also look at previous articles and presentations, I talked about option strategies on this. Again, I've suggested using selling puts to enter, selling calls to get income out of these shares. And potentially you can, not only outperform decay, but now that you get a dividend yield on this, you actually can way outperform Bitcoin itself, again, if you're skilled at options trading. And that's something I also do in the service. I call out option trades on Bido. So this is what I suggest to you if you're using brokerage account. The only caveat to that, again, is that this is a futures fund. We've seen a lot of futures funds blow up over the years. You could think about what happened to USO when oil went upside down. The whole fund did not blow out, fortunately. But if you're familiar with XIV, which was a short vol futures fund, I'm still party to that lawsuit because I was a holder of it. It blew up completely, disappeared from the market. So you have to be careful with futures funds. So, again, I hope none of you are putting too much crypto in your retirement account without having a real strong risk management perspective on it. But if you choose to do that, just be aware of that risk and read disclosures and understand that product before you do it. But at least in regards to correlation to Bitcoin, this is the strongest thing we have on the market right now that's available for brokerage accounts, barring setting up a self-directed 401k or IRA and then holding real Bitcoin, which is also a possibility. All right, so those are takeaways. Again, like if you're a long-term investor, I'm really trying to fight off the temptation, for people to think of Bitcoin miners as gold miners, and in the same way, they really are not. And I'm not saying you can't hold them long-term, but I would say you would need a ton of hedging. You would need some, option strategy and all sorts of stuff. If you're looking for something to sort of set and forget for the long term, this is not your thing. If you ask me, you've got to be an active manager of it. But great for swing trades. Again, I can't say it enough. Bitcoin miners have mismanaged their business, and I don't know a single one who's done very well. Maybe they'll come around. Maybe they're coming around right now. Maybe they're correcting. But I haven't seen big changes of personnel. I haven't seen hedging department forms. Not that I would know when that happens, but I haven't heard about them. I haven't seen them try to do any sort of market call. I think they're going to have to in such a volatile market if they're going to be operational going forward. And then, again, Bido has risks of its own, as I enumerated, but it's at least highly correlated to Bitcoin and doesn't have this third-party aspect. It has a third-party risk in regards to the futures, but it doesn't have this third-party business risk that we see in the miners, which really are sort of failed operational management time and time again. All right, so that is it. If you want to follow me on Twitter, you'll see occasional posts on Bitcoin. Oh, and then I also do a once per month public webinar that I normally have weekly for paid subscribers. So if you want to attend that, just watch my Twitter. It was last week, so I try to do the third Saturday of every month. I hold a weekly webinar on Saturdays, and I try to do the public one every third Saturday. All right, and then there's a link to the service, but I'll get us back to the QR code so you can snap those if you like, and I'm ready to take questions.
All right, Ryan, thank you so much. We had a viewer here. In your opinion, what would you say that would be the top 3 miners?
The only one I'm willing to own is Marathon, as I said. The problem is right now we're staring at the swing trades we've been following near completion. So I would not do any fresh entries here. I would watch for pullbacks. Again, the problem me saying that is the manner of the pullback matters. And I can't tell you exactly how that's going to work given the structures that we have. There are a lot of different scenarios right now, given the sloppiness of the chart. But the only one I'm willing to own is Marathon. I mean, there's a big argument that Core Scientific, they have the most hash rate, but they also have the most financing to get there. And I think they were recently regulated back to OTC. So I don't know how anyone would want to own that right now. And I'm thinking off. And I think second, I would say Riot. And I didn't cover Hut, and I probably should have, but I wanted to get Hive in there, which is the utter disaster from a long-term chart. But Hut would be the third. So Marathon, Riot, Hut. But here again, you're asking me for the top 3, and I'm saying those are the better 3 of sort of honestly one step away from junk assets. They're going to have to really operate differently for them to survive going forward. If Bitcoin is really heading into a bull market, they get some runway, right? They get some runway to fix their operations. But if they are still in this mode of operation after the next Bitcoin top, I'm not sure they'll be around anymore. And some point in time, they either correct or we get new miners that actually get, quote unquote, get some religion. They understand how they need to run business in this market.
All right, excellent. Thank you. We had another question here, seeing that they say Apptopia detected a recent sharp increase in crypto wallet downloads since the closure of Silvergate Bank and other bank crises. Do you think that will help drive crypto higher?
I think it has. That's the only thing I can think of for the strong move we've seen in Bitcoin. If you're looking for reasons, let me be clear that I don't tend to look for reasons in markets. I tend to look for what. I trade the what, not the why, because the reality of any market move is you listen to the financial news and they're sort of trolling for reasons of this or that happening in markets, and sometimes they come up with the most ridiculous things. So I'm a person that's really doesn't care for reasons, unless I really believe that reason gives me an edge. But I can generally see what a market is doing with my own 2 eyes, and I don't need indirect information. But I suspect, just me thinking about what's going on here is that well, one, in November we had the FTX failure, right? That's that big exchange. I had exposure to it. I had to get my money out as fast as I can. I was lucky. Some of my subscribers were less lucky. But that was November 2022, and that was the low of Bitcoin, right? And that was when we saw a big surge in self-custody because people realized we can't trust these third-party exchanges wholeheartedly. So, and now we have Silvergate, or I think what's more important is we just have a bank crisis, right? And one of the beauties of crypto is that you can get yourself out of the banking system, at least with some of your assets, right? I mean, we can't divorce ourselves completely from the banking system yet in the United States, but there may be a day when we're able to with Bitcoin, potentially. I don't know if the authorities will allow us to do that. They might put a lot of roadblocks, but we've obviously seen a big surge in Bitcoin after those banking failures, where, even despite the fact that some of those banking failures like Signature and Silvergate were in the crypto industry and serving the crypto exchanges, you'd think it would do the opposite, right? So that's why, again, while I don't look at reasons, I look at the what, and the what is the price is surging. So I think it's interesting. We'll see. I don't, again, does that mean it's lasting? Well, the only way I'm going to determine whether it's lasting is whether price stays over support, and it's level by level. Again, I can't give you every level right now because it depends on what structure does in the future. But right now I've got 21K and 17K as my key support levels below us. And then we'll move them as the structure reveal itself. So that's my answer. Again, I'm always cautious about the whys.
All right, excellent. Thank you. Another viewer here, they're kind of an interesting question there. What do you think will happen to miners and mining when the halving reaches 0? So from 1.5 to 0.7?
Well, the Bitcoins have to develop a fee market. So that's when, like right now, there are some fees in Bitcoin. So when you mine something, there's two ways the miner makes money. One is the new Bitcoin that they win, and the other is mining fees. And mining fees happen often when people want their transaction accelerated. I've paid an extra fee to accelerate a transaction that was getting hung up. It happens more when the network is clogged. But if you have a situation where their big miners start to turn off their miners because they're not making so much money, you'll see the network clog, and then you'll see fees get paid, right, to get their transactions going. So that's how it's going to work. There's lots of hemming and hawing about that. Is the fee market really going to be healthy? Vitalik, the founder of Ether, has criticized the Bitcoin network that it just isn't sustainable because of that. The thing about Bitcoin is it really is the most decentralized global network, and I'm pretty confident that it is, but we're so far from that. The other side of it is, the other aspect of it is, I think we'll see democratization of mining more, because one thing that happens, it's a lot easier, like I can set up a mining machine and mine Bitcoin because I don't have to run a public company, right? And it may be negative from a base P&L, but running a little mining machine to get some Bitcoin because it's sort of a hobby / small way to accumulate some Bitcoin is desirable to me. And I'm not doing it right now. I've done it in the past, but we have lots of people that feel that way about the Bitcoin market. A lot of people mine just to say, I'm contributing to the health of the network. And so I think that's the only reason I can think of why difficulty has continued to go sky high while the profitability of that mining has gone down, while the price has gone down. So the profitability of that mining has gone down. So how is it that mining is increasing while the profitability of doing so is going down? I can only imagine it's altruistic, right? They want to keep the health of the network, people that are doing that. So I'm pretty confident that it'll be good, but we don't know until we get there, right? I mean, every halving, the next one is mid 2024. Every time that happens, it gets a little bit difficult to make money in mining. But I have to look at the fee aspect. I haven't seen charts on fees, but I suspect they're going to have to grow over time.
All right, excellent. And question here: should I own crypto assets directly, or should they use an alternative crypto investment vehicle, a trust, ETF, or IRA?
I always suggest, if you can get confident, buy your Bitcoin that's real, your spot on the spot market, and put it in a cold wallet. Especially if I have a certain aspect of my crypto that I'm trading actively and it's on exchange. I keep that at a level I feel comfortable, especially since I've been party to 3 companies where I had exposure. 1, I've got the money out, FTX. 2 are locked up right now. Again, it's not breaking me, but that's because every time I have money on an exchange, I go, well, how much of this am I willing to lose? And then I reduce it. Right. So I suggest you limit any exposure to exchanges to money you consider risk money and money you consider that you need to trade actively for some reason. If you're not trading actively like I am, and you just want to buy some crypto for exposure, get it in a wallet, get it in your hands, get yourself out of third-party risk. If you're not comfortable with that, sure, you've got Bido. I would say Bido is probably safer than having your money on some overseas exchange, for instance. It may not be safer than, say, having it on Coinbase or something like that, where it's regulated and whatnot. So again, talking comparative risk is sort of dangerous, but that's what I suspect. And again, so that's sort of like, you can think of it as like degrees of risk. And I would say reduce your risk as much as possible.
All right. Thank you. We have time for one more here. We're wondering, with Bitcoin holding steady, are crypto market traders, are they waiting this Fed decision coming up?
There's always a reaction in Fed, but it's not comparable to the stock market. Like, so I've seen, my trading day, for instance, I cover a service, and on one screen, I'm literally day trading the S&P 500 E-mini, although I turn it off on Fed day because I don't like Fed action. But I'm watching the chart. I'm watching the oil chart. I'm watching the gold chart because I trade all those markets. And then I've got my Bitcoin chart up and I'm covering it with analysis, and I've got some trade bots and I'm trading it, etc. So I'm very intimate with Fed action, and some days it does nothing, and some days it does something. And to be honest, it's really unpredictable. A lot of times it does quiet down days before Fed, but that doesn't mean the next day it wakes back up. If that makes sense. So again, I'm very intimate with this. Ignore the Fed. It is, I mean, think about it. We are you know, I kept hearing crypto traders over the last year say, you know, Bitcoin is not going to turn until the Fed stops raising rates. Well, the low was half the price it is now. We've doubled almost. No, we have doubled since November, and the Fed hasn't lowered rates yet. It hasn't frozen rates still yet, right? Think about it. Waiting for the Fed is kind of a mistake. Now, that being said, you know, that there could be a raise of rates, and then Bitcoin turns and start breaking some of the support levels that I'm talking about. I can't rule that out. But if you're sitting here waiting for the Fed to turn the cycle over, well, you already missed a double in price. Something to think about.
Right. True. I mean, Bitcoin is kind of untethered from the real economy.
So I won't say it's 100% untethered, but yeah, the point is you got to watch. Assets. You got to watch what the market's actually doing.
Right. All right, Ryan. Well, perfect. Thank you so much. Another brilliant presentation. Very informative. Thank you so much for taking the questions as well.
All right. Thanks, guys.
All right. Have a great one.